into a soft or hard landing? But with strength in the labor market and consumer spending, could we be heading into a so-called no landing scenario? Joining us now is Wall Street Journal reporter Nick Timiraos, who wrote about that topic over the weekend. And it really piqued our interest, Nick, because that has been the debate of the last year or so. Hard landing or soft landing? What do you hear about a no landing? What does that even mean?
Well, a no landing means you don't get the slowdown in growth that economists and, importantly, that policymakers of the Federal Reserve have been anticipating. So I think a no landing scenario is probably just a delayed landing, right? If you were thinking that you were going to have a recession this year and it now looks like the Fed isn't going to bring the plane down, then you're looking at something like that happening in 2024. A no landing is probably a delayed landing, and the longer you delay this, the more likely it probably is that you're looking at a hard landing.
I mean, part of the shift has been an acceleration of the economy, something no one really expected to see at this point after so much tightening in the system. How do you think the Fed would react to a hotter than expected inflation report tomorrow?
Well, they're going to have two reports, Sarah, before their next meeting, so they don't have to, mark to market their views right away. And if you go back to the December FOMC meeting, there was a lot of pushback from economists and from commentators to those inflation projections where they said they thought inflation was going to end this year at around 3.5% using their core PCE measure. A lot of people said that's implausibly high. And so now I think you're starting to see that data dependence does run both ways. And Powell didn't push back against the market's more benign view of inflation a couple weeks ago. And then after the jobs report, I think you've seen the market come closer to where the Fed is. And so that's sort of what I would expect to see if this does go on the high side tomorrow.
I was going to ask if you think that the market has been too enthusiastic about a Fed pause, Fed cuts, given what you're hearing and how you're reading the Fed.
I really think, Sarah, it has to do with the data. If you think that you're going to see a lot more disinflation here, you're going to get the help on the shelter side, you're going to get the goods disinflation, then the market forecast from a couple weeks ago, didn't seem absurd. And I think that's why you didn't see Chair Powell push back against it. But, the Fed, I think their view has been that this is going to be harder. Last week, Powell said this could be bumpy, and so you could almost interpret that as they're not expecting progress in inflation to be in a straight line. They don't think every report is going to break in this sort of miraculous melting away of inflation. And so I think that's where it's going to be difficult, because we're going to have these questions around how long does this sequence of 25 basis point increases go on for.
Right, and so the data is going to tell it, and particularly it seems like the inflation data is going to tell it. Is a no landing scenario that you write about, is that bullish or bearish? Because it's good if we don't go into recession, good for earnings, good theoretically good for our economy, but it's bad if it keeps the Fed at a more restrictive level for a lot longer.
I think the Fed has been pretty clear here, Sarah, that they want to see things slow down. They keep talking about a labor market that's out of balance, that demand is too strong. And so if they don't see the slowdown, it means that they're going to take steps to try to create the slowdown, whether that means a higher terminal rate or just, holding at a higher level for longer. I think that's what we're going to find out in the weeks ahead. But a no landing here is not consistent with what the Fed says they want. And so that's why I go back to the first point. A no landing is probably a delayed landing.
I wonder what we think the bar would be for them to double up again and go 50 basis points again instead of 25. They've shown flexibility here relating to the CPI reports.
They've shown flexibility, but really more in the sense of adding 25s. So I asked John Williams, the New York Fed president, last week about whether they would put a 50 on the table for March, and he really didn't seem to want to go there. So, anything's possible, but right now they seem to be trying to get everybody to understand that their reaction function to hotter data is, higher for longer, using 25s, and then, getting markets to price out those cuts. Those are the two mechanisms I think you're more likely to hear about right now.
Nick, thank you for joining me. It's good to talk to you.
Thank you, Sarah.
Appreciate it. With all these topics front of mind for investors, Nick Timiraos of the Wall Street Journal. After the break,